Traders, are you struggling in making a profit? If that's a yes, you need to do some additional homework. One of them involves reading this book. Okay? The title is Tape Reading and Market Tactics, written by Humphrey B. Neal in 1931. Amazon sells it, less than $10. I strongly suggest you to read it. And if you read it careful, you will understand why you're having issues making a profit. A lot has to do with your thinking, with what you see in the charts, and the studies that you've been relying so much on. Okay? A lot of traders concentrate in the moving averages, the candles, type of candles, RSI, whatnot. But you have to understand all that information is historical, already happened. To break it down a little bit more, you have to start thinking, what exactly is the marketplace? And the marketplace is nothing else but a place where people come in to exchange property for money. You have buyers coming in to buy a property, and you have sellers coming in to sell a property. Okay? And the definition of fair market value for a property, I'll read it, is the price at which property will change hands between a willing buyer and a willing seller, where neither individual is under any compulsion, like being forced to do it or being coerced to do it, to buy or sell that property. And both individuals have reasonable knowledge of relevant facts of the property. How does that apply to the stock market and when you buy or sell a financial instrument like an equity stock? Just think about it. Who sets the price of the property being exchanged, which is the stock? The buyers and sellers. Okay? They both have to be willingly to sell and buy at a price that they agree to. And that's where the limit orders come in, right? In the level 2, you have the bid, you have the offers or the ask. Okay? And those individuals are setting the price of either what they want to offer to sell the stock they own. And then you have individuals setting the price that they're willing to buy the stock. And that's how the fair market value of the stock comes into play. And then the tape records that agreement, that transaction between those two people. How much they're willing to buy and the quantity of the stock that they were willing to buy or sell, right? That takes place in the tape. The tape, all it does is record that data, nothing else. Okay? Then that data from the tape is transferred by mathematicians to studies and like a chart. Okay? So people can visualize it instead of just looking at the numbers. But the only thing you're able to see in the chart and the studies after the transaction has taken place is what has happened in the past, not the present, not the future, but what already took place. And I think that is the biggest obstacle a lot of traders have, because they're using that data in the charts and studies as if somehow it's going to influence future stock action, price action, or volume action. And it does not. If you are using the charts and the studies in a highly mechanical way to place your buy orders or sell orders into the market, you're destined to fail because that information is past. It already is gone. It's not going to happen again because those two sellers, that seller and that buyer that already took place, they're not meeting again. What are the odds that the same buyers and the same sellers for the past 10 days are going to show up at the same time for the next 10 days? It's just not happening. Okay? From second to second, they're not the same people. They're different humans. Think about it. The buyer's a human, the seller's a human. They use platforms, they use computer connections. I get all that. I'm talking behind everything, there's an individual making the decision. And that specific buyer and that specific seller whose transaction is in the tape in historical time frame, right? Because it already took place. They're not going to meet again for the same price, the same stock, it's just not happening. It's gone. So the studies and the chart are very helpful in telling you what the trend of the market has been up to now. What those humans have agreed to in the past, up to now. Now what is about to happen, and definitely not what is going to happen. Has nothing to do with any of that. Yet you have traders that are making their decisions to go into the market based on which the EMA. Did the 200 meet the 9, the 10, the 15 EMA? How long ago? Oh, it's going to go this way, the big candle, the hello. Are you kidding me? Are you serious? Has nothing to do with that. It's history. You have millions and millions of traders. None of them are going to meet again the same way as they met 5 minutes ago or a minute ago with the same amount of shares and volume and price. It's just not happening. It's gone. It's history. The only information the studies really help you with and the chart is to know what the overall trend and idea has been of these humans when they met to buy and sell a property. And it tells you what they have done until now. That does not mean that somehow you draw a line through the history and that's going to be the future. It's foolish. So I strongly suggest everyone to read that book so you could fully understand that the current price action and volume action has nothing to do with the past. In the sense that somehow the past is going to dictate the future. It's not happening. Now, I'm not saying the charts and the studies are not helpful. They are helpful. It tells you the trend of the market. It tells you how all these individuals, humans, what the thought process has been when it comes to what the fair market value is of the stock all the way until now, until like a minute ago or seconds ago. But it doesn't tell you going forward or the current status. It doesn't say that. So making assumptions as about what is going to happen is flawed. And that's why I believe a lot of traders have difficulties because they are mixing data from the past to make assumptions and put expectations in their mind as what is about to happen into the future. And that's way far from the truth. I mean, it's not like that. You have to fully understand that what you see in the chart from past, meaning not now, not what's coming from the tape, but what already has been recorded a second ago. That information is only helpful to know what the trend has been, what people have been thinking up to now about the fair market price for the stock. But it has nothing to do with telling you where the stock price is going to go. And that's why you see a lot of traders frustrated, because they see a moving average somewhere and they see the candle has touched the moving average, and somehow they think, oh, it has to break out of that, or it has to hit that. That's going to be support. Really? First of all, do you know who establishes the support of the value of a stock? Buyers. Buyers are the ones that cause the stock price to climb, to rise away from that last sale level where a lot of sellers began to sell, which is the support area, right? And then the reverse is true. I mean, the sellers create the resistance when they come and they start selling massive amounts, and there are not enough buyers and the price declines. But the past buyers and sellers from prior transactions has nothing to do with the buyers and sellers in the future transaction dictating the price. Dictating the price. It's different. So why will you make assumptions and put things in your mind that are just flawed, in the sense that it's not true? It's not going to tell you where the price is going to go. Anything could happen that changes everything in 5 seconds, in 10 seconds. That has nothing to do with what humans have agreed to a minute ago, or 5 seconds ago, when it comes to the fair market value of a property like the stock. So keep that in mind. Please do read the book, because I think it's going to help you. It's going to help a lot in understanding that you cannot use the chart and the studies as like if it's set in stone about the stock price going forward, because they just don't do that. Nobody knows what the next price is in the stock. That only comes in effect the moment a buyer and a seller agree to what the fair market value is. I already told you what the definition is of fair market value for a stock. What a willing buyer and a willing seller agree to make the transfer, the change of property for money. Okay? And that changes. That changes every second. You could look at the level 2. It changes nonstop, right? And once that agreement comes into place, it gets recorded into the tape. That's it. It's just a record. It's just historical record. That's it. Nothing else. And from that data, the historical record that gets recorded, from that information, you can see what those humans have been thinking what the price should be. But just because humans for the past 10 days have been thinking what the price should be, or for the past 10 minutes for the stock, doesn't mean that the humans involved in the future transactions are going to follow that. Or they're going to agree with them, and they're going to say, yeah, sure, we'll believe them. Let's go ahead and set this price. It's not happening, okay? So you cannot rely on it in a mechanical way, as of either this or nothing. You're going to lose. Don't you get frustrated? You go and you place your bid, or you buy a stock and immediately flushes on you? And you'll be like, but I place it right outside the EMA. It's going to break through the EMA. It's not. You don't know that. You're hallucinating. You're putting things in your mind. It has nothing to do with that. And the only reason that it's affecting you is because you're allowing that information from the past affect your thinking going forward as to a specific financial instrument and the price without understanding that it doesn't dictate what is going to happen. It's just a record. Look, don't you have a birthday every year and you take pictures every birthday every year? And those pictures are a record of your birthday that day from the past, right? That doesn't mean you're gonna have birthdays forever. Something could happen and never have a birthday again, right? It's the same thing. The pictures are just a record of your birthday in those days as you were growing up, but you don't know what's gonna happen. Maybe that's a drastic or extreme example, but it's the first one came to mind. You have to understand the charts, the studies in the charts built by mathematicians when it comes to statistics and probabilities. It's just that, a record of something that already took place. And records do not dictate future action. Until you fully understand that, I'm telling you, you will struggle because you're not allowing your mind to operate with the real information you have in front of you of what's happening in real time right now. And that is the level 2 data and the tape, not the charts, not the studies. While the charts and the study could tell you an overall picture of what these humans who in the past have agreed to a specific transaction in buying and selling a financial instrument, okay? While the charts and the studies do tell you what has happened, they don't tell you what is going to happen or what ought to happen. It's not like that. However, they do tell you the overall trend, what these people have been thinking about until now. Now, are you gonna make financial decisions based on what people have thought up to now? Really? Like, think about it. It's a financial decision. Buying a stock is a financial decision. You got to talk to an advisor that could, give you the proper investment advice. I'm talking something else. I'm talking about, in your mind, your ability to disconnect those two things. The past information with the current information that is coming across. You have to be able to separate them. They're not the same. The current information as it's happening, the level 2 information, before it becomes a record in the tape, it tells you exactly what's happening right now. Once it gets on the tape and it goes on the chart and the studies, it's gone. It's history. So why will someone make a financial decision just based on historical information without looking at the real facts of what's happening in front of them? You're bound to lose. You're bound not to get profits. There's a big reason why all these public companies, whenever they publish their prospectus, the regulations require for them to have this language in there telling you that past action, past information, whatever, does not dictate future conduct, right? I mean, common sense. The same thing here. Past information, past transactions between humans as buyers and sellers does not dictate what's going to happen next. So how can you rely on those studies and chart as if it's set in stone, like that will happen? And then when it doesn't happen, you're like, oh, you're depressed. Because I expected it to go there. I should have been right. What happened? And then you start having this internal emotional conflicts. but you're failing to understand the basis, the principle that it has nothing to do with it when it comes to future action. And that's a big struggle for a lot of people. And you have to fully understand it um, to become profitable, at least advance in your trading skills. You have to be able to separate those. You have to fully understand that there's no moving average is going to dictate where the price of the stock is going to go. There's no short candle from the past that dictates where the price of the stock is going to go. You will never find a chart, two charts, or a chart from a stock that is identically the same as any prior candle, the same place, the same amount of volume, the same price level, lows and high within the minute gap or whatever it is, time frame. You're never gonna find one that is identically the same. Now, wonder why? Because they're not the same buyers and sellers, or the volume action, or the price. It tells you the overall picture of what people have been thinking, but it doesn't tell you it will never be the same, because going forward, it's not going to be the same. So how do you determine where to enter? I personally, my emphasis is just mainly the level 2 on the tape, because it's the action of what's happening. The past data to me is just a big picture of the overall thinking, the trend of these people, the humans that have met in the past to exchange money for the stock. But I am not gonna put my money on assumptions of what other individuals have done in the past. I care less. The data is good to have a big picture of where the market is going, based on what humans have been thinking. That's it. Because they already agreed to those prices, and that's it. It's done. You can't undo it, right? So I strongly recommend that book. I think it's out of all the books I have read through college, graduate school, and outside of that, I would say it's one of the most important ones that I have read. Okay, and I strongly recommend it. Thank you for watching, and if you have any questions, please reach out, and if you haven't, please do subscribe, and if you like the video, please smash that like, and like that you can also get notices when newer videos do come out. I hope I'm able to help others in the way they're thinking when it comes to trading. But I really do put a big emphasis in at least thinking or understanding the disconnect between the two, the past information and the information is about to take place. Okay. All right. Thank you.